All right, so welcome everybody to Enhancing the Accountant Bookkeeper Connection series. So it's hosted by myself, that's me for those of you who don't know me, and I am the founder of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. A little bit about myself professionally. I am the founder, I think I just said that, of Cloud Bookkeeping Services and Tanya's Bookkeepers Bootcamp. Bookkeepers Bootcamp did qualify for IPC CEC credits in 2018, which was very, very exciting for that. We were the first member to have an actual program that was that. So this is not a boot camp. This is just strictly one of the webinars that we're hosting, which does qualify for CEC credits, but we'll get into that shortly. I'm the Intuit Global Firm of the Future for 2018 and the Canadian runner-up for 2017. A 2018 Inspire Award winner and a top 21 influencer in the Canadian bookkeeping world for 2018. Insightful Accountant, top 100 ProAdvisor for 2018. A top HubDoc top 50 cloud accounting firm for 2018 and 2017. A Black Swan alumni mentoring under Ron Baker. I'm also a Futurepreneur Canada volunteer mentor. I'm a member of the Intuit Trainer Writer Network. I'm advanced certified on QuickBooks Online ProAdvisor and a certified QuickBooks Desktop ProAdvisor, although I barely work in desktop anymore. Certified in HubDoc, WayPay, T-Sheets, certified professional bookkeeper through the IPBC with over 20 years bookkeeping and income tax experience. A little bit about me personally, my passions are my family, unique experiences. So those of you who have creeped my Facebook or know me know that those are not all my family. That my daughter and myself like to go and we're basically groupies, and we like to go and hang out with the cast of our favorite TV shows on weekends. So every Thanksgiving we go out and actually hang out with the cast of Supernatural. And so that's most of them are the cast of Supernatural. We've got some Vampire Diaries with my daughter, and then two of our favorite bands from the West Coast, Headley and Mary and the Strength. There is one picture of my family, and they're with myself, my husband, and my daughter, and of course Rosie, who is sleeping, who is my dogger, and she is also our office manager. She's here lying down on the job, but making sure we're working today. And of course, I am learning American Sign Language with my daughter. So we are very proud to say that this webinar does qualify for the continuing education credits through the IPBC. There will be 2 polls that must be answered in order to qualify for the credits. There is no right or wrong answer, and there never will be on any of the ones that are approved. We're hoping that the whole series does get approved, but we of course have to submit with each topic one at a time, and they're approved per topic. Yeah, there's a very good chance that they'll all be approved, but this one has been approved. And the recording of the webinar will be emailed within 2 days, and the certificates for your CE credits will be emailed within 2 weeks. A little bit about KATA accounting. So I've been collaborating with Jonathan and Bob for a number of years. We have multiple mutual clients. I think we're probably into the double digits now. They work in QBO. They're absolutely amazing. They pay attention to detail, outstanding customer service, and as you guys heard a little bit of our banter before, because of just the types of guys that they are, they want to make sure that we understand. They want to work with us as a team. It's made me be a better bookkeeper, and I absolutely thank both of them. They are our top. That we actually, if somebody comes to us without an accountant, they're our top referral, just because of that. They're absolutely amazing to work with. So anyway, I'm going to pass this over to them. So take it away, boys.
Thanks, Tanya. Yeah, that's something that we're quite proud of, the fact that you feel that way. I'm going to share my screen if that's okay.
Absolutely. Oh, and Bianca, what is Bob's Twitter? Bob doesn't know. Okay, never mind. You're answering that. I see that.
So everybody should see. Did you notice I said yet?
Yet. We'll get Bob there. We'll get him there.
That's what you want, Bob. You just got on Facebook. We're getting Twitter.
That's right.
So everybody should be able to see the slide. Let me know if you don't. Today we're going to be talking about management accounting. A bit about me. I am often considered a thought leader in accounting and technology. was a member of the inaugural Intuit Accountants Council. That was essentially a group of bookkeepers and accountants who helped give feedback on a very granular level to Intuit. I still do work with them from time to time, but my term is up with the Accountants Council. Elite ProAdvisor and Intuit All-Star, and winner of the 2018 Inspire Accountant Award. We are very, very proud of that, mainly because the reason we won was you. So, we are known collaborators with a desire to see the improvement across the industry. This is one of the reasons we're doing these webinars, not only to help anybody who's observing get better at it, but also to find other ways to source revenue. I have extensive experience in the mortgage industry with rental properties, e-commerce, digital and affiliate marketing. I don't have it there, but a bit of software development, working with those types of companies as well. And I'm a member of JCC, the Japanese Canadian Cultural Center's board, on the finance committee and on the marketing committee. And I'm also an avid fisherman, MTG, and poker player. Bob, tell us about you.
Good morning, everyone. It's wonderful to be here with you. Happy to see so many participants. We love that. So I attended the University of Waterloo for my undergraduate and graduate degrees in mathematics. Then I saw the light and worked for a CPA firm, one of the big four. And I worked there for several years up to the manager level. Then I moved into industry and had some very challenging positions in companies, doing a lot of financial planning, long-range planning, and building complex planning models, which involved consolidations, mergers and acquisitions, income tax, that type of thing. Because I worked in a couple of different conglomerates, I gained experience in several large industries. Grateful for that. Then I went out on my own and did consulting work with a few different companies, which you can see listed there. And I'm still working on some consulting work. But a couple of years ago, Jonathan and I connected, and we arranged for me to come in and start working with him. That has been a great experience. I'm really pleased with it, and hopefully that'll go on for some time. I was recently awarded a lifetime CPA from the Institute. That was an unexpected, but quite an award that I'm quite proud of. I live in Georgetown with my wife and 4 cats. Enjoy woodworking, travel. I'm currently broadcasting from Florida, so I'm missing all that wonderful weather that folks are having back around the GTA. Been learning a little bit about car maintenance as just a sideline and get my head around other things, and I enjoy doing stock market research. So that's a little bit about me.
It's wonderful, this cloud environment that we live in, where you can do things no matter where you are. A couple of years ago, I was working from the southern U.S. For a month, and I know Bob has been to Costa Rica as well as Florida, and maintained things. And Neri, who's a key member of our team, actually she had a family emergency and had to return to the Philippines for a few weeks, and was able to maintain her work schedule there. Although she was working, of course, overnight instead of overnight our time instead of overnight her time. So let's get into management accounting. Simple definition of management accounting is providing financial and non-financial decision-making information to managers. Usually when we look at statements, statements are always looking backwards. They're always looking at history. Management accounting takes that history and helps project it into the future. So you can find things like drivers, and what causes things to happen. What is the cause and effect relationships, things like that. So I was originally a certified management accountant. Management accounting is the profession that involves partnering management decisions, devising planning and performance management systems, and providing expertise in financial reporting and control to assist management in the formulation and implementation of an organization strategy. Now that's a very, very formal definition. Essentially, it means helping the numbers make sense to owners so that they can make decisions using. Bob, I don't think you'd have anything to add.
No, we'll cover different points as we go through the session.
This is a very involved set of materials, so please try not to feel too overwhelmed about stuff. But we're going to try and cover all of it. I'm not sure if we'll be able to. So in this slide, M is management, F is financial. So for management accounting, it's only used within the company. Financial accounting, it's used in the company, but also it's used outside the company. Those notice to reader statements or reviewed or audited statements that are provided to lenders or investors or regulatory bodies, things like that. Sometimes those external reports are required by law or by some kind of other regulation. I know a lot of anybody who gets funding from the province usually has to provide reporting about how they're using that funding, things like that. But management accounting is something that often goes overlooked because people quite often can be a little bit afraid of their numbers. They just want to know how they did, and they have an idea, they have a guess of how they're going to grow and how they're going to improve, but they aren't actively looking at those numbers or understanding how to use the historical numbers and behaviors to predict future. So management accounting can be applied to everything from an individual salesperson, maybe using a KPI. KPI, everybody knows that, key performance indicator. It could be used from that all the way up to the whole company. Looking at marketing is very common one, looking at the A/B testing of social media campaigns, things like that. These are all applications of management.
Cost accounting,
sure.
Where you're looking at the costs that flow into the products you're creating, and which is a very complicated area usually. And you want to control those costs, understand them. So cost accounting is a big part of management accounting as well.
One just real quick kind of add-on on that is that's a way we use T-sheets a lot. And I think T-sheets should be used by just about everybody, like every business, to at least understand how the time is being used. So for us, we use it from a cost accounting perspective to understand the cost of performing a job, but we also use it to help understand where training might be needed, or where there's a breakdown in a process, or a process isn't as tight as it could be. Usually those kind of indicators come out from T-sheets for us. So little shout out to them. So this all sounds very familiar, I'm sure. And we're on to our first poll question. So have you used any form of management accounting to assist your clients? And I see that question has just come up.
Yep, so we'll just leave this up for just a couple of minutes, or not even a full minute. Once I see everybody's on, we'll give everybody a chance to vote, because of course, just a reminder, you need to answer both poll questions in order to get your continuing education credits. So we will give enough time. We've got 4 left to vote. So 3, 2, all right. I want to give everybody a chance. Come on, the last 2. Okay, so we'll give it about 10 more seconds. So far, can you guys see the results? This is my first time using the polling. Can you guys see how the slide so far? Do you guys see that part of it, or?
All I see is the question slides as host and panelists can't vote.
Okay. Okay, so okay, so we've got 21, so one more left to vote. So right now what we're looking at is often is 29%, rarely is 10%, a few times is 29%, and never is 33%. Okay, so we are going to give it 10 more seconds for that last person to vote, and then we will end the polling.
So the biggest category is never.
Yeah.
Yeah, and I can see that if you're doing bookkeeping primarily for clients, that's going to be your focus, and you're probably a lot of your time is taken up with that. So I can understand that, but it's heartening to see often 29% and a few times 29%. So this is used out there quite a bit.
Okay.
Yep. Okay. So just before we go on, we've just got a question here. What percentage of your clients do use T-sheets? Oh, never mind. You answered that while the polling question was up. Never mind. I see that. Sorry.
Yeah, that's I don't know, Tanya, if you wanted to address that. This is something that I'm trying to encourage our clients to do. However, most of our businesses are owner-managed businesses, very small, few if any staff, and
Right.
we have had trouble providing, I guess, selling that value to encourage people to take on that additional cost and staff responsibility. Because just because you have it doesn't mean people won't use it, right?
Right. And we actually have, I love T-sheets for us. We have Xero clients that use T-sheets, but again, we have a lot of sole props. We have, like retail stores, they're checking in, when they're there, they don't have a need for it. We have one client that could use it, but they have chosen not to because they're in the construction industry. So it's great for them. I think it would be ideal for them, but when you look at the cost, it's just a really hard sell for them to try to sell them on the cost. We use it internally. We actually stopped using it because we were like, no, we're getting rid of the timesheet. We stopped using it, and then we realized because of how we're structured internally, it was very difficult for me to find out basically how much clients grew or how much time we were spending on their file, because of course that is taken a little bit into account in our formula for value pricing. So we've gone back to tracking just so that I can kind of compare last year to the year before or whatever as a pricing tool. If we forget to hit it, it's not the end of the deal, and it's not the end of it because we value price anyway. So that's how we use it internally anyway. All right, so I will stop sharing the results and pass it back to you boys.
Are we back on the slide?
You should be, yep.
Okay. So the objective of this webinar, and there are some other webinars that are going to come out of this, is to give tools to enable people to provide additional services to clients, to help people help their clients grow, understand their risk and mitigate their risk while building a business and not just a job. Clients don't know about this stuff. This is stuff that you really have to teach clients about, and you have to sell the value on. And it's not easy to sell on because usually, at least in my experience, clients are more focused on price than they are on results and on the value of the information that can be provided, which is quite unfortunate because usually the value of information that can be provided far outweighs the cost. One example is a client who we recently parted ways with. We gave one suggestion that saved them 4 times our fee every month. So that was, one way that these kind of techniques can really help. It's higher value service, helps you build relationships, makes you more of a trusted advisor rather than a transaction, and helps you bring those businesses into the future. Bob, did you have anything to add about this?
Well, just to say that it just back on the relationship point, it can cement your relationship with your clients. Just ask them, what's going on. It's an opportunity to have them talk about their business and their plans and what their challenges are. And for example, if someone says we're going to buy a building and run our business out of that, you might say, well, would you like to have someone look at the financial matters around that, and whether kind of help them with the decision, like, is it a good decision to own a property rather than rent it? And we do have experience in doing things like that, so you don't have to feel that it's all on you. We're here to collaborate with bookkeepers, and we love to get involved in assisting your clients and things beyond the everyday, day-to-day activities.
One thing I just want to add on there too is you mentioned the buy versus lease for building. That can be actually way smaller. That can be a photocopier. That can be a car or truck or delivery vehicles. There's lots of implications for the buy versus lease, and that's just one of many using.
I mentioned the buy versus lease a building because I did some work on a project like that last year, and the analysis was presented to the board of directors, and they were extremely impressed with the work. To a person, they said they hadn't seen anything like that previously, and it was very helpful in terms of them coming along to make their decision. So quite often your clients will be impressed with what you're able to deliver.
Now, this slide, I'm going to move on. This slide is very busy here.
If I could just say that the purpose was just to show managerial accounting, which is in one of the boxes there on the top right, in terms of the overall financial management of an individual. So you got your tax accounting, the day-to-day financial accounting, which includes the bookkeeping, and then kind of over you can see historical and predictive. So you see managerial accounting more on the predictive side. So, and it involves planning and decision support. So it wasn't to go through all the details, it was just to give you a perspective on where managerial accounting would fit into the overall financial management process.
Yeah, the information you can provide for managerial accounting can be very, very valuable. So, yeah, okay. I guess we won't discuss too much of this. Any questions about this crazy slide before I do click forward? I'll give it a second. We'll address the questions as they come up. Suzanne, I see that you have a question there. I'll get to it in a minute. Bob, would you like to take over here and talk about just maybe not every topic on here, but kind of what these are?
Don't worry, Jonathan. I got my watch right beside my laptop here, so I'm watching the time. These are some of the specific topics and areas you can get into in terms of management accounting. And I have to admit, I haven't been involved in all of them, but quite a number. You can see there are a lot of planning topics, forecasting. So that gives you the sense that a lot of this focuses on going out into the future. What are we trying to do with our business, and what maybe are some goals we can set for the business? And how can we tell when we're going off track? How can we tell when we need to intervene and change course or do something different than we have been? So we've laid out a calendar for the rest of the year. We'll be doing these webinars the last Wednesday of each month, except in the summer when we all want to take a break. So in February, we're going to look at just basic business metrics that you can use for most of your clients, things relating to number of days sales and accounts receivable and inventory turnover ratios, pretty simple ratios that management can use to help manage their business. Then in March, we're going to do some cost, volume, profit analysis. And over the rest of today's session, we're going to look at each of these individually so we can just give you a flavor of it. Certainly not going to go into them in any detail, but we'll talk about each of these and what it does and what it can tell you and how it can help in terms of managing the business. April, just looking at budgeting, and that's a topic that pretty much everyone understands and hates usually. Maybe we can give you some reasons why you don't really have to hate it. In May, we'll look at forecasting, and that is longer term, like a 5-year plan for a business. And that's an area I've spent a lot of my career in, and I really enjoy that. And I'm sorry I don't get to do as much of it now as I used to, but it's really helpful, and it can reveal a lot about the business and management strategy, where they want to take the business. In June, we'll take a look at buy versus lease. July and August will be off. September, risk profiling. What about risks that the business is taking? Sometimes it's not even aware it's taking risks. So that is just delving more into what could happen that we may not be prepared for. October, we'll look at cost analysis and costing your inventory and the products that you sell. November, we'll look at different segmentation of a business. If the business doesn't have just a single product, or it doesn't operate in a single geographic area, you'll want to do some analysis on profitability by the different features, and that kind of thing. So, and then in December, we usually do a wrap-up of and summarize the areas we've looked at and what we might have learned. So I think that covers everything I wanted to say about this slide, Jonathan.
Well, would you like to continue on this one, or you want me to go?
Yeah, I can talk about this. So next month, we'll be looking at basic business metrics and analytics. And that is just a list of basic metrics that you can do. It's usually relationship. What's the relationship between sales and your accounts receivable balance? Returns, equity returns and capital returns, turnovers, and fixed versus variable. So we'll talk about a list of metrics that can be applied to most businesses, and that should be useful.
So this was a really useful thing that Bob found. Oh, I don't see the web link to it. I believe this was from a Forbes article, right, Bob? Do you have? Can you?
Yeah, it comes in. I think it comes in later.
Oh, okay. All right. So
it
these
takes
are just
time loading.
These are just some different. Oh, is it like a? Ah, there we are. Oops.
Yeah.
So this is it's not Forbes, sorry. This is the URL where you can find these metrics in these groups and so on. Probably the most important that people are going to want to focus on at the beginning are the financial and the sales. Understanding what drives sales. I have a friend of mine who has a restaurant who has absolutely phenomenal metrics in certain areas where most restaurants fail miserably. For instance, his average turnover per year in HR is less than 1. That means he loses less than 1 employee per year. And he only keeps cream of the crop employees. So he's very slow in his hiring process. His customers typically drive over 45 minutes to go to the restaurant. Over 75% of the customers are repeat customers, things like that. They do other things, but those are just some examples.
Does he do, Jonathan, does he do customer surveys? Like, does he ask customers to fill out a questionnaire or anything periodically?
Yes, there are occasional customer surveys, and quite often they're tied to some kind of promotion, and they're online, so that the customers who follow can do that online and get $10 off their next visit or something like that. They do some interesting things like that, but really, I mean, what it comes down to is just really getting out there and knowing his customers. Even though he's the Red Seal chef behind the restaurant, he doesn't spend his whole evening in the kitchen. He gets out there and he talks to people at the tables, especially.
Go ahead, Jonathan.
Sorry, I was going to say especially new people. He wants to know how they heard about them and why they're there, and if it's a special occasion and things like that. Where they've come.
That raises the point that doing management accounting does not come without cost and effort. You've got to get out there, dig out data, and some of it isn't readily available. So you may have to create a new type of report or ask the client to track something that they're not currently tracking. It's quite frequently that you don't have the data you need, and you have to go out and get it.
Yeah, and sometimes this stuff is not something that you would see in a financial system, right? Like a lot of these things that he got are not coming from financial system. All right, Bob, did you want to hop on here?
Yeah. So rate volume analysis, I love this. This is really interesting. And so if you just look at the second paragraph, so your actual sales are 314,000. Sorry, the chart doesn't match the numbers, but it's just for the idea. And your budget was 245,000. So you've got a difference there, like you're doing way better than your budget said you should. The question is why? Why am I doing better? And are we selling more product? Is our pricing off? You can get something called a mix variance, which is beyond the scope of today, but we'll be talking about that when we talk about rate volume analysis. So when you do the analysis to identify the factors in the total variance of 69,000, you find that volume, so you've sold more product, that has contributed $85,000 to that 69,000 variance. So in your report, you know why you're doing what you're doing, whether it's better than budget or worse than budget. You get something called a mix, and it's a little more complicated to calculate, but we'll talk about that later. In this case, your rate or price variance lost you money, 37,000. So you're actually selling product for less than you had budgeted. And then again, in this case, just to show that you can have other factors that contribute to a variance, you're selling in a different currency, some of your product. So you have a currency variance, which means you budgeted for a certain currency rate and the actual rate is favorable and contributing $9,000. So once you do this type of analysis, quite often what you do is you develop a waterfall chart. So you have your starting point, which is the blue bar on the left, and you have your ending point, which is the blue bar on the right. And you can look at each of the factors that contribute to the variance and see pictorially how they have contributed to whatever your variance is. So it's very easy to kind of look at your variances and see which ones have done better for you and which ones have done worse.
For a lot of these topics that we're touching on, pictures are worth 1,000 words. They help people understand a lot easier and a lot quicker than looking at a chart of the numbers. So, budgets and forecasts. Bob, did you have anything? You were done with the analysis.
Absolutely, yeah. We got to keep moving here.
All right, keep going. You're on a roll. Keep going.
Okay. Budgets and forecasts, my favorite. So budgets, we can probably fly through this. Budgets kind of tell you where you think you might go. It's an opportunity for the organization, if you have different departments, to all contribute and make sure that they have kind of a single vision of where, like if the sales department thinks they're going to double sales and the HR department isn't planning to hire any people, you're probably going to run into problems. So you need to coordinate the budgets and make sure everybody's online. I have worked on budgets in a $400 million operation for an insurance company, which involved probably a dozen different departments, each contributing their piece of it, and it takes months to pull it all together and have everybody singing from the same songbook, so to speak. We'll talk about budgets a little more in one of our sessions. I just wanted to point out that forecast is a periodic update of the budget. So you get halfway through the year and something happens that you didn't foresee, and it's going to throw your budget way out of line. Larger organizations normally don't recast their budget. They do an update called a forecast, and that shows the variances and the differences that you're anticipating from whatever the changing circumstances are.
I'd just like to on here and say that servicing the type of clientele we do, quite often investment or sales come up. Sale of assets, sale of shares, investment by a financer, or investment in equity. These things come up quite often. And usually one of the first things they want to see are budgets and forecasts, especially if you're looking at a large, like say a bond issuance or something for a startup. They're going to want to see where you think the company is going and what assumptions you've taken to build that budget and to build that forecast. And quite often they will, especially in the case of VCs, they'll have some kind of influence on the budget and trying to keep things under control.
Yeah, just before you moved on for that, I just wanted to point out that there's, of course, a lot of software that you can use for that. Leanne's the one who does it here because I am the enigma to the accounting world, that I think budgets and especially forecasts are just like a magic 8-ball. With me, if I budget, is it in the bank account for me to spend it? I spend it. But Leanne does that. That's her forte, is dealing with budgets and forecasts. And so, of course, there's many softwares. The one that she actually found the best for this and easier for the clients to understand is Dry Run. And so we've started instituting that with our clients that we're moving to more advisory services, to using Dry Run with it. So if you guys haven't taken a look at it yet, that comes with our highest recommendations. Again, it depends on what you're looking for, but we found that that's easiest to move things around and really help work those clients.
Mm-hmm.
Yeah.
Certainly heard of Dry Run, but I haven't actually used it myself.
That's Barb. She loves you.
Yeah, I know. Barb Easter, right?
Yeah. Yeah.
Yeah, the feeling is mutual.
Yeah, it's just you can do so much with it. And Leanne, she's again, because that's her forte, she looked into all the apps, and each of them are useful in their own areas, but she is absolutely enamored with Dry Run and how much it can do. So yeah, that's our top one and our first go-to. Absolutely. So just wanted to point that out if no one's taken a look at it yet. Amazing.
All I'm going to talk about on this slide, because I know, Bob, this is your where you love. The quote. I love this quote from Alice in Wonderland, Alice's Adventures in Wonderland.
Yeah.
The part of it is missing, where she says, "I don't know," and then he says, "Then it doesn't matter which way you go," or something to that. That's very important. I mean, you need to have a plan. Every conversation we have with a new onboard for business, what's your end game? That's the first question we ask. And sometimes they've never thought about it. So it's a very interesting way to start.
Yeah. It's all about what's your goal, and the more important question, how are you going to get there?
Yeah.
You know, so you set up your plans, you set up the costs related to whether you're going to do marketing or whether you're going to add another product line. You have to look at all those costs, and then you need to track how you're doing against what your plan is. So yeah, I love this quote too. So long-range planning is, what was that, Jonathan?
Bob, I was just gonna say, you go ahead with that.
Oh, okay.
And there's a question I want to answer, but I'll wait till you're done.
Okay, yeah. So long-range planning, I'm accustomed to 5-year planning, but you can do 3-year, you can do different ranges. Just like with budgets, it allows the entire organization to come together and have a single view on where management wants to drive the place, the organization. I'll just tell one quick story about a budget process I was involved in, and it was a very large organization, and we worked our guts out pulling the budget together, starting with sales numbers and then rolling that out to the different departments as to what their budgets should be to support that sales forecast. It was weeks and weeks, long hours, and we had the meeting to present the details to management. We walked in and we had our package. We passed it around. The president took one look at the front page and threw the package on the floor and said, "Go back and do it again." He didn't even say what was wrong, or he literally threw it on the floor and said, this doesn't fly. So that's the other thing in budgets and financial planning. You're usually going to get several cycles. Sometimes management themselves don't have a good idea of where they're going, so they wait till the process is done and then they tell you what they really want. It leads to a little frustration, but eventually the process gets done, and over time you become accustomed to that uncertainty as you're doing the work.
Yeah. The one thing I want to add about this, and then just a comment on a comment in the chat, the assumptions. The assumptions are so important. As accountants, we try to be conservative, and we try to steer people away from making outlandish assumptions like, oh, we're going to grow revenue 500%. Well, you need to have something to back that up. And then the comment from Suzanne in the chat, yeah, when it comes to speaking with a business owner, we find most of ours are owner managed. It's very important to speak about the big picture. What did they want personally? Because at the end of every business, there are people. There are employees, there are owners, there are investors, but there are people. What are their objectives? Because that can really affect how things are done. So, okay, let's keep going. We're running low on time.
Mm-hmm.
So, discounted cash flow. Discounted cash flow essentially means that there's $1 today is worth more than $1 tomorrow. And when you think about it, it's true. Prices never really go down. Inflation is something we all deal with on a regular basis. So this discounted cash flow discounts the value of cash moving forward in a decision-making process. In the buy versus lease or business valuation decision, the discounted cash flow really has a huge impact on how you're going to do. For instance, if you're buying and putting a lot of cash down now versus leasing and putting a little bit of cash and then extending payments over a long period, that might make the lease decision more attractive than the buy decision. Similarly, when you're looking at business valuations, besides the potential variance that comes with most business sales through customer attrition and all those other things, the one thing you have to keep in mind is that if you earn the same amount next year, in real terms, you actually have less purchasing power than you did the year before. So, risk profiling. Okay, so I want to talk about a few things of risk here that I've seen that I would really low-hanging fruit. Number one, insurance. If you have a business owner who's operating without insurance, you really need to encourage them to have CGL insurance at the very least. That would help protect them from, like, the basic slip and falls, or you didn't do your job, so I'm taking you to court, those kind of lawsuits. But a lawsuit can destroy a company. And it's happened many, many times. And having good insurance helps mitigate that risk significantly. Another big risk that I see is incorporated companies that operate off personal debt. So for instance, you could have a corporation where the corporation's quote unquote credit cards are all actually the owner's credit cards. The owner is technically loaning that money to the company and then taking money out of the company to pay off those credit cards. Should something happen to the company, those credit card debts will not go away. They will still exist. Whereas if those credit cards are under the corporation instead of the individual, there are different measures that can be taken so the full weight of the debt doesn't fall on the owner. There are some things that can be planned for, some things that can't be planned for. Bob, did you have anything to add in this area? I know the stampeding giraffe example is a great ridiculous example of things that can happen, but did you have anything you wanted to add?
Not specifically. I think we'll be talking about this in the session. I think it's September. It'll be in the fall.
Okay. So job costing is pretty much understanding how much it costs you to do a job, or how much it costs the customer to do a job. Probably the most relevant that people will see is contractors and small construction companies, but this can be used in everything. It can be used in everything from what we do for tax returns and for bookkeeping to even lawyers and the cost of taking on a case or a client in their situation. You add up essentially the costs that go to a specific job, and you understand what your contribution from that job is. You can assign an overhead allocation or not. That's up to you. We do not in ours. And it just helps you understand what jobs are profitable, what jobs aren't profitable. And then from there, understanding what kind of customers you should pursue. Because of course you want to pursue the profitable customers, not the unprofitable ones. Anything to add, Bob?
No, that's good. The three types of costs that accountants normally look at are materials, labor, and, as Jonathan said, overhead. So you're going to look at your lighting costs and your machinery running costs and things that you don't think of directly, but which do add to the cost of producing your product.
Oh, this is a great one. Benchmarking. How are you doing compared to everybody else out there who does what you do? The first thing that I want to say is Industry Canada provides some good loose benchmarks. Now, they are average over industries. They're based on things such as the NIAX code, if you've ever encountered that, or the GIFI that you would put on a corporate tax return. That's where Industry Canada gets their information. So sometimes it has to be taken with a grain of salt, but it's a good starting point. There are business intelligence organizations out there that can help you get much more detailed information, but of course those come at a cost. It essentially compares how you're doing relative to the competition. Bob, did you have anything you want to add, or do you want to explain what the gram negative, gram positive is?
Well, that was just a scatter diagram, and I wanted to just include that as the gram negative and gram positive. That doesn't really mean anything in this context. What I wanted to show is you kind of determine where your competitors are, and then you put a spot on the graph, which is where you are, and you see how you're doing. You benchmark yourself against everyone else. And it's interesting you mentioned the Industry Canada and so on, and finding your industry and where you fit in. We actually had a client that was running out of money, basically, and they were severely stressed out because they didn't know what was wrong, and they really wanted to fix it. So we just ran a few ratios using industry averages that we got from the records, and we looked at just the amount of salary the average company paid as a percentage of sales. What are you paying your people versus what your sales are? And this company, the president, the owner, was taking, I think it was $90,000, and according to the industry average, he should have been at $50,000. So the solution was very simple, and the president really didn't like to hear it, but if they wanted to get themselves out of that stressful situation, it was very clear what they needed to do. So it was a simple process, but it really paid dividends. You know the situation, Jonathan.
Yeah, of course. One other thing I'm just going to add as we move on from this slide, a couple more things actually. So this kind of scatter graph, you perform a regression analysis. That would give you your benchmark line that you'd work against. That's how IC does it, Industry Canada does it. And one of the things I discovered when I first formed this company was that the average bookkeeping and accounting sells for 50% of cash flow. And I did some digging, and the reason is most of them just close. They never sell their book of business. So it's something to think about if you're in that position where eventually you're going to want to have a saleable asset. How do you make that saleable asset and ensure that you're getting more than 50% cash flow?
So you have to do some long-range planning ahead of time.
Exactly. So we're on to our other poll question, and I think actually our timing is good.
Yeah.
So yeah, Tanya, do you want to throw up the poll question?
Yep, sorry, I just have myself muted, so here we go. So it's, do you have a client who would be a good candidate for management accounting support? So we'll just give that some time. It's kind of bouncing around so far, where more people are yes, and then maybes and no seem to be about half and half so far.
But so, we could just mention that Jonathan and I are here. We love collaborating with people. So if you feel that it's going to be challenging for you to offer assistance to your client, know that there is support that you can call upon.
No, absolutely, and they are great for support. So we've got 80% voted. We're going to give it about another 20 seconds for those last 4 people to vote. Remember, if you do not vote in both polls, you do not receive your CEC credit for this. So we'll just give that about another 10 seconds now. So right now we're sitting at about 65% saying yes, 17% saying no, and 22% saying maybe.
I'm just curious, in the chat, where do you think the most opportunity is for you to add value to your clients using it?
I was just wondering the same thing.
Just wonder, eh, Bob? You and I are on the same wavelength. That never happens.
All right, so we're going to close it down the polling and share the results. So hopefully you guys can see that. So 63% said yes, 16% said no, and 21% said maybe.
Yeah. Your client, I've also found your clients will love it if you show interest in their business, if you ask them what's going on and what plans do you have? How did you find the last year? What are your challenges? They love to talk about their businesses. And we asked that question of one of our clients, and she wrote a whole paper on the specifics and the geographic challenges they were facing, and it was just wonderful. So it's pretty easy to get your clients talking and just kind of chat with them about where's your business going.
Well, and one thing that I want to mention on that is we actually, we do a monthly review on all of our clients. We send them a little report card. We were thinking, hey, no news is good news. And we realized when I had two of our clients kind of basically have little mini meltdowns when they read the reviews because they weren't responding to them. And we didn't do that follow-up phone call with them, which we've now changed our plans to them, that we are going to send that report card out basically, and within 2 weeks do a follow-up phone call so that everything is dealt with immediately. But if you don't ask, they won't share. So we actually had them in and we had to explain to her, we're a part of her team. We want her to succeed. She did not say anything and was ostrich, with her head in the sand because she felt embarrassed to ask, embarrassed to say something. And it was just, we had to open those lines of communication to get things going and moving properly. So she left here feeling absolutely amazing and knowing that we're not going to judge any questions that she has. We don't want her to assume she knows what she's doing. She's a support plan, so she does the day-to-day herself. And we just, do reviews and follow up. But she was embarrassed to ask and tried to, muck through and ended up mucking the books up because she didn't want to ask. So again, just asking those questions with her, bringing her into the conversation, reminding her we're an extension of her team. Really did that. So yeah, communication is key because again, no news is not always good news.
Right. I love that. That's a great story.
Yeah, it is. Just a couple quick comments about communicating with your clients about these kind of things. Quite often you'll have to dig deeper. So when you say, how's it going? The automatic response is, oh, it's going great. Or, oh, it's going okay. Or, oh, it's fine. There's an automatic emotional human response to that. So you need to dig. You need to ask more open-ended questions and maybe get the wheels turning as to what kinds of things that maybe they want to know about that they haven't asked about. But you asking questions will make them feel more comfortable asking questions and try to be open-ended.
And that leads us to next month in February. We're going to be talking about some business metrics that can be done pretty quickly on a set of books periodically. And it leads you to these questions. Why are your receivables getting out of line? Sorry, I keep talking about receivables, but it could be anything like payables that are building up, and you'd be looking at cash flows perhaps, and why isn't cash moving as quickly as it should? So we can look forward to February to talking a little bit about that.
Okay.
So I see Diane mentioned KPIs. Diane, I'm curious, what KPIs do you think would be most valuable? I know we're running out of time. Tanya, are we going to go over a little bit, or do we have to cut right at 11?
We can for anybody who wants to stay on, both questions have been answered, you know, the whole webinar. So if anybody gets off, you know, from this point forward, they'll still get their CC credits. So if there is anybody who has to go, don't worry, you'll get that. We'll keep recording until all questions are answered. So if anybody does want to stay on to ask questions, that's fine as well.
So I don't know if, I'm not seeing many questions here.
No.
Tanya, do you have any anything that maybe we've just bounced on the surface you'd like to know and ask something about, or something that you've heard of, or anything like that?
I don't think so. Let me ask Sandra, because she just kind of covered that. Right. Was there anything you wanted to know a little more excuse me, in depth on that? She's saying she doesn't think so. It was pretty informative, but it's telling her that she still needs to have extra conversations with me. But that's fine. She literally just on Sunday passed that course. It was the introduction to business bookkeeping, and of course I taught her end user. So this was all about T accounts, and let me tell you, her poor head was spinning.
Suzanne had a comment here. Extra charge for management accounting review. Yeah, definitely. I mean, this is not something that you should give away for free. There's a lot of value in the information you can provide. I mean, maybe do some very simple, maybe financial ratios or something for people. As far as whether it's monthly or annual, it all depends on the customer, on the you know, how up to date their bookkeeping is. This is a really good reason why bookkeeping should be kept well up to date. And KATA is a great integration. Actually, KATA can give you a lot of answers. If you ask, like, hey, KATA, what's my current ratio for XYZ company? They can give you a lot of cool information. So that's another tool that you can use to make.
And my view would be that a lot of management accounting is you're creating something new. So it's kind of based on the service. It's based on the activity that you're working on. So you'd probably charge an hourly rate. But the other thing I will say is that it's very common when you start doing some additional analysis that will lead to further analysis. It will raise questions that, because you're digging deeper, raise questions that aren't understood, that need to be understood. So management will ask you to go away and do something more, to analyze it in another way, or to dig deeper into the numbers. So it kind of can be a self-generating type of fee that you can charge.
Just a quick question here, I think, from Suzanne. Don't know much about KATA. Okay, Suzanne, get KATA. Get it for your own books, if nothing else.
KATA is amazing.
There's a free version. And when you sign up, you get the premium for 14 days. So check it out, have a look, and it's natural language processing AI. So you just type in as though you're speaking to it, and it should get stuff. Now, something to keep in mind is KATA does not work well if you're not following pretty regular QuickBooks or Xero procedures. If you're, for instance, doing batch accounting, batch entries, I absolutely hate that, but people do it. KATA won't work very well in that situation because you're putting everything in 12 journal entries. Essentially, use the software the way it's intended to be used, and KATA can be pretty miraculous. It can do some amazing stuff.
Yeah, and Suzanne, I think you still got some individual bootcamp calls left. Leanne knows lots about KATA and Dry Run because you asked about them earlier. If you want anything in depth on those, yeah, because those are the two main ones we are using here for our advisory services. So yeah, absolutely. Yeah, and then we can, even if you need more notes, sorry, Margaret, it's KATA, CHATA.ai. Yep. There, Jonathan just typed it in. Yeah, absolutely amazing. And, of course, the whole team out there is amazing as well, too.
Yeah, good people.
Okay, so I think that Diane did answer your question.
She did,
Just pull
yeah.
up a little bit,
There's
yeah.
a whole bunch, and that's a very good point. Is not every KPI is relevant for every company. So, for instance, current ratio is very important, or the asset test ratio, days survivability. Those are very important when it's a cash crunch. But if a company's got $2 million in the bank and 60,000 a month operating expenses, that ratio is pretty meaningless to them in that situation.
All right, so I guess
Any more questions?
no, looks like it. All right. Well, thank you very much for attending, and we will hopefully see you all next time.
Yeah, I hope there was a lot of value in this. Thank you very much for coming, everybody.
Okay, thanks.
Look
Take care.
forward to it.
Have a great day, everybody. Take care.
Take care. Bye.
Bye.